All right, we are live. For those watching the recording, we're going to start in 3 minutes. Let me just fix this because I can't see the chat for whatever reason. All right, that should work. For those who are coming in, let me know if you can see my screen. If you can hear me, let me know. And if you can, well, I haven't shared my screen yet, but let me know if you can hear me. Cool. All right. For whatever reason, my chat on YouTube is not showing up on this screen, so I'm going to be looking over here to see your questions. For those who are in here, let me know if you can hear me and if you can see me, and we'll start in 1 minute. Why does it always break the chat? I gotta figure that out. Sweet, welcome, Jerry. I'd imagine that's how you say your username. Welcome. All right, let's try this so I can probably type in here at the same time. There we go. All right. All right, let's begin. Welcome, everybody. This is the Let's Learn with Advent series, November 15, 2025. For those who are new here, pretty much I hold these once a month, usually Saturday or Sunday, depending on the schedule, and pretty much a group coaching session. So whatever you guys want to ask me, put it in the chat. We can go over whatever you want. If you're new to trading, if you've been trading for a while, everybody is welcome. Any question is welcome, so don't think your question might be silly or stupid. It could be that one little thing that can change it for you or for somebody else who needs the same question as well. So with that being said, whatever you guys want to ask, please put it in the chat and I'll start answering questions. As always, for those who are new here, please hit the thumbs up or like the video. So YouTube is like, cool, people like this. Let's share it more. I would greatly appreciate it. Let me bring my chart up. Sweet. If you guys can see my screen, let me know. Welcome, Daniel. Excellent. Yeah, so whatever you got, whatever questions you guys have, start putting it in the chat and we will talk about it. Ooh, shooter on the week. Inside week on ES, fun times. Any questions you guys have, Put it in the chat, or we will awkwardly just sit here as I wait for questions to come in. You guys have me for an hour. Do I use anything else with the strat like supply and demand? Great question, Cam. I use fibs in addition. Like I use some ICT concepts, like liquidity levels, things like that. Fair value gaps to an extent. Fair value gaps for me, they don't make or break the trade. They just add like a cherry on top, right? Um, Same thing with liquidity levels. If I'm taking like a strat trade, I do have some ICT setups that I need ICT concepts to be present to take it. But with the strat in and of itself, just keep it simple, right? Um, but yeah, I do add other things to it. Like for example, let's see. Let's see if I could find something that I would take here. Can I find a cleaner version? Hey, Jerry, are you looking to go long or short on Tesla so I can give you an idea? What's my edge when trading? Of course, you would ask that question. We'll go over that too. This is not the cleanest TTO, but we'll use this as an example right here on the 5-minute on YM. So as we can see here, we have this next push up, pull back, and then we can take that bullish reversal to continue the trend, right? Now, for those who trade ICT, we can see that we have a fair value gap right here that price dipped into before it closed as a hammer, right? Now, for me to take this TTO, again, I would never take this because it's not as clean as I would like it. But for the sake of the conversation, let's say that I took this trade. If I see it dip into a fair value gap, that's not going to make or break the trade for me. It's going to give like a cherry on top. Like, oh, cool, it did a pullback and it dipped into a fair value gap. So that can give you additional confluence. But for me, it wouldn't be necessary. Let's say compared to the TTO that we have down here, right? We could take this 2 down, 2 up, bullish reversal to get back into the trend. We can see there's no fair value gap down here, but it's still a TTO nonetheless, right? But if it does dip into a fair value gap, cool. Some additional confluence that we can use. But again, not really necessary for me. Hopefully that answered your question, Cam. The strat on platinum, I've never traded platinum. Definitely paper trade for a bit, see what time frames work best for it. Because in my opinion, there are certain stocks that I only trade on a higher time frame and some that I only trade, let's say, like on a lower time frame or tickers and stuff like that. All right, so Jerry is short on Tesla or wants to be short on Tesla. Let's see. So the monthly triggered a 3 down or an outside bar to the downside with a lower high before it reversed. Weekly has been bearish since last week, well, 2 weeks ago, rather. Daily has a failed 2 down. Overall, bearish. We still have a month until pretty much this year or quarter is done, so might get an inside bar week unless we get a really strong push on Tesla. Where is my tool? Yeah, we have to clear this entire 70-point range. So might be an inside week. Just keep that in mind if you do want to trade it. Short term bullish, at least based on the daily. 4-hour 3-1 setup with a shooter. We'll have to see what happens on Monday. 6-hour, I don't really use like that, but filled that little gap here, dipped into this fair value gap. Let's say short-term bearish on Tesla. And again, maybe a day trade for a long setup. I take it both ways every day if the setup presents itself. So I never really necessarily look at Tesla to take a longer term position on it. I only day trade it. Because last thing you want is to be in a trade on Tesla, swing trading it, and then news comes out and you can't get out and it's against you. So that's my opinion on Tesla. Just be mindful, we might be inside week. There's a big range has to clear if somebody wants to go long. To the downside, if we open up here, just have to break $20, $21. That could be done like a day or two based on its ATR. Cool. Kev, what's my edge with trading? I'll try to make this super simple. Let's see. Let me bring this up real quick. What is the most recent one that I made? I'm going to share a different screen. For those who are coming in, welcome. Whatever questions you want to ask, put it in the chat and we'll go over it. Can you guys see my screen? I just changed it to my trading system. You guys should be able to see this. At least I can see it on my other screen. So what is my edge? To me, my edge is like a combination of everything that I have here, right? Let's zoom in a bit and then we'll kind of skim through each section, right? So hopefully you guys should be able to see this. At least I zoomed in a little bit. If not, let's maybe zoom in a little more. So this is a part of my trading system. Essentially, it incorporates, me being prepared to trade with my morning routine, whatever that may look like for you. It incorporates as well my trading rules, right? We need to understand ourselves and what works and what doesn't work for us, and we need to respect that, right? On top of that, risk management. You can make as much money as you want, but if you can't keep it, it doesn't matter, in my opinion, right? You'll probably see it all the time online. People making all this money in like prop firms and like passing these accounts, but they don't even have one payout. It's like anybody can over leverage and pass a prop firm in 2 days, right? If they're using max contracts. So risk management is definitely important. On top of that, as I mentioned, with the trading rules and understanding yourself, when it comes to setups, I have my setups clearly defined. So pretty much exactly what I look for when I am trading. So if none of this happens, if none of these setups happen here, then I'm not going to do anything, because these specific setups I've got enough data on, both on paper trading and live trading it, that I know that they work over time. So this is pretty much all I do, right? On top of this, having self-discipline, right? Because knowing how to trade is one part, having the discipline and the mental resilience to be on these charts and execute properly is important as well. I think that's probably the biggest edge that I have, because in my opinion, anybody can learn how to trade, right? Learning technical analysis is just memorizing the charts and what's going on, and different setups that appear on a weekly basis or monthly basis or whatever it may be, a daily basis even. But if you don't have the self-discipline and the patience to execute it, then it really wouldn't matter, right? There's people to this day who I know who trade the strat when I started, and they're still having trouble. But it's like we're trading the exact same thing. There really shouldn't be a disconnect. But yeah, hopefully that gave you an insight into what my edge is. I highly encourage all of you to get very clear on yours as well. What are your rules? What do you need to be prepared for the trading day and all that other good stuff? That may look very different for a lot of you. I don't have any kids. I know people who have kids and some students who have kids, and their morning is very different than my morning. So, make it according to what works best for you. This is what works best for me for now. Cool. Oh, well, thank you, sir. Let's see. Starbucks weekly 2 thoughts. Jason, we looking to take Starbucks bullish or bearish? Short. Yeah, we do have a fail 2 up on the weekly. Could probably take it down, maybe to at least this body over here, 80.83. Let's see. The monthly is an outside bar, so you have to be mindful of that. We can potentially just keep on kind of chopping in this range and then close as a 3 bar this month. Did we dip into there? Let's see. And we slightly dipped into that fair value gap. I personally would want a better strat setup. Personally, I don't really like when the candles are like all close together, because we might get something like this over here. We're kind of just like, it triggers directions. Sure, it might hit some targets, but it's not really like breaking out of anything, right? So if I were to take it to the downside, I would have 82.22 as my first target at the 61 fib, and then either the 70 fib right here or the body of this 2 candle from this green candle. And then, of course, whatever other fib targets you may have and the strat targets. Let me know if that made any sense at all. Let's see. Cam said he's mainly using the strat with the orb, mainly on gold, but I want to trade something less manipulated. What time frame are you normally using? I like the 3-minute and the 5-minute. That really depends on what I'm looking at, because when I'm looking at gold, I usually have 4 time frames up. I have the 5-minute up here, the 15-minute on the top right, 30-minute on the bottom left, and then the 1 hour. Why is the 5-minute there? And then the 1 hour on the bottom left. I mean, the bottom right, rather. What I also do is go on the 4 hour, just regular trading hours on, and I would mark off the previous high and low. You could also mark off like previous day high, previous day low, previous week high, previous week low, just so you have it there. So that way, when I'm looking at this time frame on the 1 hour and the other ones, I already know that if price is above this level, then the 4 hour is bullish. Same, if it breaks to the downside, stuff like that. But yeah, I pretty much use all 4 of these time frames And it really just depends on the setup that appears. If it's going to be a TTO, I'm usually only going to be taking those in the 5 and 15 minute. If it's like anything else, like a W or whatever, I'm really going to take that on whatever time frame is printing on. One thing that I've been looking at as well that works pretty good. I've only taken it twice, I believe, live. The 12-hour time frame. Got to take my glasses off for this one. Can't believe I missed it. The 12-hour time frame on gold with extended hours, when it prints an inside bar setup, that thing almost always prints. We can see a beautiful example right over here. 2-1 setup, and then boom, that 2 up just goes straight up. And then one that just happened on Friday was this 3-1 shooter to the downside. That thing just got obliterated. Granted, you need to be up at 6 in the morning to take this, and I'm usually sleeping around that time. So I have to fix my sleeping schedule if I'm going to want to take this more consistently. But this one would have been fantastic. Probably would have used half of this shooter as my stop because that stop up here is too crazy for a micro. Only 10 points and change for a stop. Sheesh. Damn, that would have been a good one. But yeah, 12-hour, pretty good for gold when it prints inside bar setups. Again, the biggest thing is just being mindful that those stop losses are going to be huge. So I'm probably only going to be using like 1 micro for these setups, unless I'm using prop where I can leverage more. But for my personal account, I'm going to be very picky on which specific ones I'm choosing because those stop losses are crazy. What is a TTO? Let's go back to strat basics. A TTO is simply a pullback in the direction of the trend before price continues higher. So pretty much how I have drawn up here. Price moves up, price pulls back, and then reverses back into the direction of the trend. A TTO is pretty much just a pullback before it reverses back into the direction of the trend. Let's look at gold, for example. What happened this week, which is a fantastic TTO. We have to see if it even completes because I'm not liking this wick, but we can see here we have a nice push up. We have a reversal. Price reverses. It has to reverse. It can't just be an inside bar. Price has to reverse, take out some previous lows, and then we're going to take the first bullish reversal back to the upside, which would have been this 2 up after this inside bar. So 2-1-2 up bullish reversal. You would get in as soon as this inside bar breaks to the upside. So we'll see if price on gold continues and we make another 2 up to complete the TTO. If not, if it's going to fail as a TTO, it's going to keep on heading back down. Yep. So TTOs are always good because it helps with not chasing, right? If it's going to be a trend day, a TTO is going to print. You just have to wait for it. Sure, you can take a continuation. I just don't really care for continuations personally. I like reversals more. But again, that's just me. Cool. What other questions do you guys have? Anybody that is coming in and wasn't here in the beginning, whatever questions you want to ask me, put it in the chat. We can go over literally whatever you want. Do I trade SPX? I trade ES sometimes, the futures version. What do you think about it in the upcoming week? Let's find out. Well, we have an inside bar on the weekly time frame, so there's that. Inside bar on the month still. Overall bullish looking like on ES. We have just inside bar on the week, on the monthly and the weekly. Daily already reversed, but looks like we're getting bought up in this area. Let's see. Overall bullish since we're still making higher highs and higher lows. Always keep it basic and simple. Higher low, higher low, higher low, and then making higher highs. So definitely still bullish overall on SPX. We are bearish on the weekly based on 2 weeks ago from pretty much the first week of November. You got to see what happens this week, whether we break to the downside or the upside. Just have to clear this whole range. What news do we have this week? Ooh, let's see. We have employment change. We have orange folders on Monday. PMI data on Friday. Consumer sentiment. And a week after that, we have Thanksgiving week. But yeah, for ES, still bullish overall. Got to see what happens next week. Let's see. Hopefully that answered your question, Jeffrey. When do you know it's time to get out of a trade? Keb, we talking about after I already hit target or when I haven't even hit target, or like for a runner? Like what exactly? When you haven't hit target yet? I generally prefer not to get out before it's hit a target or my stop loss. Of course, you can always use your discretion, right? Let's see if I can find a good example. Ooh, we can probably use this one. So let's say not the best Momo hammer that I would take, but let's just use this as an example, right? So we have this 2-1-2 up continuation bullish Momo hammer setup. As we know, for the Momo hammer, at least for me, my stop loss is always going to be that hammer, whatever it is. If it's 17 points, I'm going to be taking profit every 17 points that it goes in my favor. So let's just say my max target is going to be 34. For the Momo hammer, we know that the second target or the third or the candle that we get in on, it should be closing super bullish again as like the one before the hammer, right? If this candle closes like as a failed 2 up, more than likely that Momo hammer setup is not going to work out because the Momo hammer is always like a combination of the 3 bars. We have a nice big green candle and either inside or slightly 2 up hammer bar, and then another big continuation. That's pretty much how it needs to be. There are really no other variations. So if this triggers up and it closes as a failed 2 up, probably can get out earlier because it's not going to work, right? Let's see if I could find another example. Not the best example, but let's use it anyway. So we have that nice green candle, a hammer, and then this like two that barely broke above and kind of didn't do anything. You can probably just get out as soon as that candle closes because we need another big bullish candle to form. They shouldn't be doing any of this. Let's say for the W, for those who are familiar with that setup, as soon as we may reverse on that higher high or the higher low, price shouldn't be reversing back down until we at least hit the first target, arguably until we even complete the W. But we should not be reversing at all until the first target in the center is hit. If it's reversing before that, the probability of it winning is going to be low. So you can determine to get out earlier for some moves like that. Let me know if that answered the question, Kev. Daniel says, could you please explain a bit of the Fibonacci retracements, how to use it, and what information does it give us? There's a billion ways that you can use this, and the information really depends on what you're looking for. Some people could use it for targets. Some people may be looking at it for what price potentially may be doing or going to do, stuff like that. Let's say for the sake of the conversation, this is the daily on ES. Strat-wise, my first target is going to be either the body or the wick right up here, right? So these two. So if I get into this trade long, I'm pretty much going to be waiting for at least 77 and change points to hit, right? However, let's say this range is a little far for me and I don't want to hold my whole position for 77 points. I can get my fib tool and anchor it to the first point. So this last swing high up here before it reversed back down. Before it reversed back down. And then the most recent low. So this high to this low. And now, if I don't want to just wait for the strat setup, I have these additional targets here for the fibs. So I have this target here, this one there, this one, and so on and so forth, right? So I have targets as it goes towards my strat targets because I don't want to be up 50 points and then it reverses and I end up red, right? So I want to take profit as it goes in my direction. I'll show you a trade that I took on Friday where I used something like this. So this is the 5-minute on YM. This is not the cleanest W, but we'll use it as an example. Usually we don't have none of this like blocky, tight-bodied candle structure going on for Ws. So my approach is a little different for this. So first target, as I mentioned, is always going to be the center. It could be the body or the wick. Leave it up to you guys. I'm usually using the body. So my first target for this trade was this body here. And then my second target was going to be pretty much this candle all the way up here. And then I wanted to see if I can squeeze some more and get to this high up there. Now, between the first and second target, we have a nice 115-point range. Me personally, I'm not going to let 100-point, well, I'm getting it over here with slippage. Let's say I'm not going to be up 130, 140 points wanting to get 151 and letting that go all the way back like almost 80 points to my first target, right? So I got my fib tool and marked off this high up here to this low. So now I have additional targets as it goes between the first target here and the second target there. So I have this 50 fib here, this 61, this 70, so on and so forth. I ended up getting stopped out somewhere, I believe on this candle here, this 2 down candle, this failed 2 up candle rather, for about 110 points, give or take, because I was okay with that. And I didn't really want to wait anymore to see what shenanigans was going to happen that day. But that's how I would use fibs, Daniel. Let me know if that helps. What do I trade mostly? Ticker-wise or like instrument-wise? Because I'm usually trading futures. I'd say most of my trades now are futures. But I pretty much trade futures and options every day that the setup is presented. I trade Tesla mainly for options. I'll swing trade some other tickers if it comes up on the watch list and stuff. But I'm usually just looking at Tesla to day trade. And then for futures, I trade gold, YM, ES, sometimes RTY, and I have reintroduced my ex-wife NQ back into the mix. Only for specific setups. So when I'm looking at NQ or MNQ anyway, I usually take trades on ES, and sometimes they'll be mimicking price exactly, like their patterns. And sometimes on NQ, it'll be a lot cleaner than on ES. So I'll take it on NQ instead of ES. But again, I'm only gonna be taking it on NQ if it's not clean on ES. Otherwise, I'm not mainly gonna be looking to trade on NQ because that thing will get your heart pumping. When trading options, when do we first take profit? Cashmere, that really depends on the setup, as I mentioned. So if I'm, let's say, DIA, which is the exact same thing as YM, this is just the ETF version, I'm going to trade it the same way I would normally do, right? So once it's my first target, I'm going to take some profit off whatever the contract is worth. Or I might even skip the first target and maybe take something over here instead. But yeah, so let's say I have a target here, here, and then here. I'm just going to take some profit off when it hits those levels on the chart. I don't take profit based on percentages. Like if it hits 50, like I'm not going to be like, I'm in this trade until it hits 20 or 30%. You're just going to be shortchanging yourself because maybe the first target here is 25%, but you just wanted to take 10. And then the second or third target up here might be 50% or 100%. And then you already got everything out for 30% or 50%. So I always just take profit based on whatever the chart is telling me to do. Let me know if that helps. Excuse me. Is eBay a TTO after hitting day target? Let's find out. We looking at like a bullish TTO or a bearish TTO? The weekly can definitely be a thank you. Here to learn and share. The weekly could be a bearish TTO off this shooter, right? We have that nice H pattern. So this can definitely be a bearish TTO on the weekly. The risk reward, I don't really like, at least where I would put my stop loss. You can maybe make it 50% of this range. But yeah, this can definitely be a bearish TTO on the weekly. For the daily, I wouldn't really consider this a bullish TTO. Yes, it looks like it has the pattern, right? Like the pullback, and then we can keep on heading higher. But for me, a bullish TTO, like the trend needs to be bearish. I mean, sorry, the trend needs to be bullish, right? At least like overall. To me, the weekly is bearish trend. The daily made a higher high, so market structure changed to that extent, and we made a higher low. So yes, if it does come to the upside, you can consider that as a completed TTO or at least a pattern. But again, for me personally, I want to see like a super clean bullish trend to the upside, pull back, and then keep on heading higher, right? To me, this is just we're like bearish trend, came up a bit, failed to do that H, came back up, coming back down, and then we might head higher. Pretty much what's going on here. So to me, this I wouldn't really consider a TTO, even though it looks like a TTO. Let me get rid of all these drawings. So the monthly, if this 3 up over here didn't trigger, then to me this would be a cleaner TTO. But let's just say this upper wick didn't exist. This will pretty much be like a TTO on the monthly, right? We get the pullback. We're getting that failed 2 down candle. Could potentially take it back up and see if we could break those highs. But do you see what I mean? Like, if we look at the monthly, we have a clean uptrend for the most part, and then the pullback. Well, on the daily, we don't really have that. It's kind of just like we were all the way up here, then we came all the way down. So like the way the TTO looks or is structured is I'm not a fan of for the daily version anyway. Let me know if that answered your question, Jason. Cool. Let's see. Ryan, I will answer your question next. Yeah, Daniel. So the fib targets or the fib levels will become my targets as well. Some people also use them as support and resistance. Again, it's really depending on your strategy. Let's see. Ryan asked, can you explain how a fair value gap gets flipped to an inverted fair value gap? I don't think the wick counts. Let's see if we can find an example. I'll try to find a clean one for you guys. Ooh, this could be one right here. So we had, this is a 5-minute. We have this bearish fair value gap right here. And then we have this bullish fair value gap, which you can consider an inverted fair value gap because it's inverting this prior one over here. So we have another fair value gap right here that's inversing this one here. It's completely closing over it. So this will be an inverse fair value gap, if I recall correctly. I never really studied them or taken them, but that's how I understand them from what I remember. Let me know if that answered your question, Ryan. To me, I believe the whole candle has to like close above it because it needs to completely invert this fair value gap. If there's a wick, that doesn't really do much. At least as I understand it. Kashmir, do you know what our targets are as strat users? I'm just trying to see how much of the strat you understand. So the question, Cash, was if you just start educating yourself with them. So with the strat, again, the targets are super straightforward. It's just the previous candle highs or lows. So if there's this 2-1, there's 2-1 set up here, and I'm taking to the upside, first target is going to be here, and then so on and so forth with the other levels, right? So if I get into this trade, I'm going to be taking some profit off at each previous candle high. So that next candle hit the first target, and then that second candle after I got in hit pretty much the rest of the targets. You can always leave some runners and then get out once price reverses against you for the runner. See if you can squeeze some more juice off out of it. Let me know if that made sense. Let's see. Looking for a new brokerage, what would you recommend? Terrence, for futures or options, and what are you using now? You use Webull and Robinhood? Don't forget your question. Oh, my bad. I completely forgot about that one, Kev. I'll answer it next. If you're using options, I use Thinkorswim just so I can have like things a little more consolidated. To me, Webull is pretty good. One, the fees are less because for Thinkorswim, you start off at 65 cents a contract going one direction. So round trip, buying and selling, that's $1.30. You can negotiate with them and lower the fee. I'm sure if you sent them for Thinkorswim your trade log from Robinhood or Webull, they can negotiate a lower rate for you. I think mine right now is like at 45 or 47, if I recall correctly. But again, sure, you can save money and not eating up those fees because if you buy 10 contracts round trip, that'll be what's dollar. If my math isn't sucking right now, about 13 to 15 bucks just fees to buy and sell the contracts. Or on Webull, I think round trip would be because they just charge like the regulatory fees. It'll be what, maybe like 10-20 cents, if that, round trip. So you can look into Thinkorswim or really just stick with Webull. Thinkorswim pretty much has everything that you would want and need all in one place. Schwab, who uses, or you need to get an account with them to use Thinkorswim, their customer service is top tier. They always help me out if I need to call. So that's what I like about them, right? If I have an issue, let's say on Webull or Robinhood, probably going to take forever to get somebody on the phone, right? So if you want top tier customer service and people to answer when you call, you can go with Schwab and Thinkorswim. I haven't had any issues with them personally. But I do love the interface on Webull, I'll tell you that. I'm praying for the day that Thinkorswim gets a cleaner user interface because that thing is archaic and old. And Thinkorswim, if you're new to it, it's going to take you a while because there's a lot to learn when it comes to Thinkorswim. But I enjoy it. All right, so Keb, your question was, if you have an A plus setup, how heavy do you go in? If it's an option trade, the most that I'm gonna risk is I'll put 10%. Well, I'll just say this. I'll be risking 3% of my account maximum on the trade if it's like an A plus setup. If it's futures, I'm probably gonna risk like $500 maximum on the trade. Otherwise, I'm gonna be risking like 200 to 300 bucks on average for other setups. For those who are coming in, welcome. Whatever questions you have, put it in the chat. We can go over whatever you want. And if you haven't already, hit the thumbs up or the like button. I will greatly appreciate it. And subscribe as well if you haven't. What are the questions you guys got for me? On your watch list, is there a reason why you don't trade gap ups or gap downs? Yes. And I'll tell you why right now. Let's say I'm looking at Tesla and I'm looking at this 3-1 setup to the downside. Let's say my target is the body for the sake of the conversation. If price gaps down, so entry will be at 403.50. If price gaps down and opens up at 400, my risk is going to be increasing and my reward is going to decrease. I and we should never be desperate enough to chase trades. There will always be more setups. This trading day is not going to make or break me, and it should not be making or breaking anybody else. If you feel inclined to chase a trade, you probably shouldn't be trading that day because your emotions and your brain is compromised. But simple answer, the risk reward gets skewed in a direction that I don't want. If I still want to trade that day, I'll go on a lower time frame and look for a different setup to get me into the trade in that overall direction. But we should never be desperate enough to get into a trade. It's not that serious. Tomorrow's another day, and it's not the end of the world. People or some traders get too caught up and like, oh man, I missed it. It's gonna do all of this without me. Cool. There's gonna be another day to trade. For example, look at this 3-1 setup here that happened on Thursday for Tesla. We gapped down and it completely got obliterated to the downside. Sure, I missed that entire move because I didn't trade anything that day. Granted, I was sick, but besides that, I still wouldn't have traded that day because it gapped down. There's going to be way more setups that happen on Tesla and a lot more moves. This is not the biggest last move Tesla's going to do. It does it every week. At least one day out of the week, Tesla goes absolutely crazy. We just have to hope that it's the day that we get in that it does that. Hopefully that answered your question, Cash. Do I trade directly from TradingView? Negative. I just have my chart up, and then either on my internet browser, I'll have Tradeovate up or a prop firm, and then I'll just execute the trades there. And then for options, I just execute the trade off my phone just because it's just a lot faster for me to do so. And that's just what I'm used to. But for futures, I'm always executing on my computer. Sure, you can execute futures trades on TradingView. To me, it's just a little clunky and it's not as fast. So I just prefer to execute it on the broker that I use directly. Top 5 option tickers for daily trading. You gonna hit me with that after all we've been through? I would argue whatever you're comfortable with, those are the best top 5s. You can always look at my watch list. To me, any 5 of those, like the main indices, SPY, QQQ, IWM, DIA to an extent, because the spread's a little wider on that one compared to the other ones. And I'm a fan of Tesla, so I'm going to put that on the list. I don't really day trade anything else, really. You might need to discover that on your own and experiment. If you have a trade flip against you, do you use a max dollar amount percentage, or if you see a clear break of structure to exit the position? It depends, right? Let's look at, let's go to YM. I'll show you a trade from Monday that lost. I was definitely salty, but it is what it is. So I was looking at this W. My stop loss was down here. And I was looking for at least this body here to get hit. First target, of course, as I mentioned, as always, center. And then whenever the W completes, discretionary, up to you guys. So on futures, my stop loss here is 35 points. I don't really use percentages in a sense. I just use like dollar amounts when it comes to futures, depending on the setup. For this specific setup for the W, I'm usually risking $400 to $500 on the trade because when it hits, that thing is going to go crazy. And I'm going to make more than that. So in this example, for YM, the stop loss here is 35 points, which would be 150, 175 per mini contract. Since I wasn't feeling the best this day, instead of getting 2 YM contracts, which would have given me, what's that? $350, $350 loss, give or take, if my math is correct. I used 15 micros. I think it gave me, like, with the fees, about a 296 loss. So in this case, I would be risking between $300 to $500 on the trade. But I wanted to risk a little less that day because I wasn't 100%. So for this trade, I only risked $350, right? Price got me in here, as soon as it came back down to stop me out, pretty much I'm done with the trade. I took my loss. It is what it is. Now, let's say if it's another trade. Let's say, for the sake of the conversation, that let's say for the sake of the conversation, I missed this W to the upside and I want to get back in on this bullish reversal here. For this specific setup, because it's not my W setup, I'm probably only going to be looking to risk $150 to $200 on this trade. Stop loss 33 points. So I'm only going to be using either 10 micros or one mini contract. So I can micros if I want to scale out. But to answer part of your question, this is how I exit or how I determine my risk for a position. It's really based on the setups. As Louis V asked earlier, like how do I size in for A setups? I'm going to risk more for better setups than other setups. When it comes to options, same thing. I don't necessarily use a percentage stop loss anymore. It's just based on price action. So let's say for this example on Friday, let's say the stop loss is $1, just to make math simple for the example that I'll give you guys. I'm going to make up a contract. So EIA, I don't know, 11:15 expiration, call, right? Whatever the strike price is. The delta, let's say, is 0.25. And the premium paid for the trade, let's say it's $1 or $100 per contract. And let's just say I get, let's say I get 10 contracts. Oops. Which is essentially $1,000 for the trade. Now, approximately, for as we know, if the delta, we're going to make or lose the amount of the delta for every dollar that the price goes for or against us. Of course, there are other variables, but let's keep it simple for now. If price goes against me and it's my stop loss, $1 away from me, I'm going to approximately lose $25 premium per contract. So if it's my stop loss, premium is going to be 0.75 approximately, right? Because I'm going to lose 25 cents on the contract. So in this case, if I don't want to risk more than $250 on the trade, I would size according to that, right? So if I don't want to lose more than $250, I'm going to put in $1,000 maximum on this trade, right? That's one way of doing it. Another way of doing it is simply just risking the amount you're willing to lose. So instead of me putting up $1,000 and risking $25 a contract, which would be $250, I can simply just buy, let's just say, 2 contracts worth $100 each. Or let's say, yeah, let's just do that. 2 contracts worth $100 each. So I'm risking $200 completely on the trade. It's either going to go to zero or it's going to go in my favor. So you can risk your stop loss, as they say. So you're only putting in the amount that you're willing to let go to zero, because I'm going to lose that anyway if I put up 1,000, right? Does that make sense? Do you take your trades immediately on weekly, daily triggers? Yeah, Jason, I do. As soon as it triggers, I'm getting in there. All right, we are over time. Before we wrap up, what was everybody's biggest takeaway? So, what was the biggest thing that you learned today? We'll see what people learned, and then we'll go about our weekend. So, what was the biggest thing that you learned today, or what was your biggest takeaway from today's session? Your follow-up question was overlooked. I didn't see a follow-up question. Do you have any videos how to execute? Yeah, learn to share. If you go to the playlist section on on this YouTube channel on mine, and you look for trainings and walkthroughs, I should have pretty much a video on how to use pretty much all the platforms that I use. So Tradeovate, Thinkorswim, there might be there's a Webull one there. There's also one for TradingView for those who do want to execute on this platform. So all of that will be there. Of course. Well, if that's all, thank you guys for coming out as always and asking your questions. We have these once a month. If you are new here or watching the recording, like, subscribe, all that good stuff. Definitely appreciate you guys as always, and I will see you for the next one. Learn and share, all good. You can always watch the recording with the same link that you saw this one. And yeah, any questions you have, put it in the comments and we'll talk about it. I'll see you guys. Enjoy your weekend.